sold, or COGS, 21,875, and a credit to merchandise inventory, 21,875. Let's proceed to the next journal entry or the transaction, which is September 19, made 50% partial payment to Mandayu Foam. So let's see what's the journal entry for this. If we are going to pay for our accounts partially, so that's September 19. So the entry will be we are paying. So if we're going to pay for our accounts payable, meaning expect that there's a decrease in cash we are paying. So you can actually write credit to cash 4,000 right away. This is a 50% partial payment. So 8,000. Remember that entry before? That's 8,000 in total. So 50% of that will be 4,000. But then what will be your debit? The debit is actually accounts payable dash Mandayu Foam. Remember that to decrease a liability, you have to debit this because the normal balance of accounts payable is credit. So to decrease, you should debit. Next, September 20. The owner withdrew 10,000 for emergency. So the owner withdrew. So the entry will be debit makinis maputi drawing or withdrawal. You can use withdrawal 10,000 and then credit cash 10,000 because the drawing is in cash. If it's other than cash, maybe if it's a supplies, then you can just credit supplies, or if it's an inventory, then you can credit merchandise inventory. It depends. So for this one, let's just use the cash. And then the next transaction will be September 24. Paid Chinchan for the full amount owed and was granted 500 cash discount. So what's the entry for this? So the journal entry will be debit. Again, we are paying for the payable to Chinchan, so that's a debit to accounts payable Chinchan, 28,000. And then credit cash 27,500 because we will credit merchandise inventory worth 500. Why merchandise inventory 500? This is due to the cash discount granted. Actually, cash discount is given to encourage or to induce earlier payment from the customer. So meaning this cash discount actually decreases the merchandise inventory account. So supposed to be, if you're using periodic, we will credit purchase discount. But since we are using the perpetual inventory system, we will have to replace the account with the account title merchandise inventory. Why this is 28,000? Because the accounts payable to Chinchan is actually 28,000. Yeah. And then next transaction will be September 26. Hired a store assistant with a daily wage of 400 to be paid every Friday. The assistant will start working on Monday, September 28. Okay, the journal entry for September 26 will be 1. There's actually no journal entry because this is just a hiring process. The account titles did not change. It has no effect in our asset, liability, equity, or revenue and expense. September 28, bought another products from Chinchan on account amounting to 60,000. The entry will be debit merchandise inventory 60,000 and a credit to accounts payable Chinchan 60,000. Again, MI is debited because once you buy a merchandise, it will increase that account. And also in doing so, since this is not paid in cash, so this transaction actually increases the accounts payable to Chinchan 60,000. On September 29, paid 200 to the courier upon receiving the order from Chinchan as agreed. So the journal entry will be, so since we are using the perpetual inventory system for this one, the transportation cost paid by the seller under perpetual inventory system will be a debit to a merchandise inventory account 200, then a credit to cash because 200 because this is paid in cash. So that increases the transportation paid by the seller or shouldered by the seller will increase the merchandise inventory account. So the next transaction will be September 30, receive 5,000 partial payment for GGSS outstanding balance and placed a new order costing 13,125 for 21,000 pesos. So this sale transaction is also on account. Delivery of 150 pesos was paid by GGSS. So this time it was paid by the customer. Okay, for this one, we will record first the partial payment, which is a debit to cash 5,000 and a credit to accounts receivable GGSS 5,000. This is a credit to accounts receivable GGSS because again the customer is now paying, so the accounts receivable decreases, and since we receive cash, that's why we debit cash. Then the next part will be the sale, the another sale, which is a debit to accounts receivable GGSS 21,000, credit sales revenue 21,000. And then again, since this is a perpetual inventory system, we have another entry for the cost of merchandise sold. So debit cost of sales or COGS 13,125, credit merchandise inventory 13,125. Intro to the T account is discussed in a separate video. You might want to check that out. In this illustration, I will use the T account instead of the more formal general and subsidiary ledger. Personally, the best way of posting to the T account that would minimize error like double posting or forgetting to post one or few transactions is by posting to each account as it appears in chronological order from the journal. Let's go back to our journal entries and post some transactions. But before that, divide your paper or at least assign an imaginary portion where all asset accounts must go, and do the same for liabilities, capital, revenue, and expense accounts. Yes, we're doing this together. So, ready?
Yes, sir.
The benefit of doing this in this manner is for us to easily find a specific account should we need to post several transactions for such account. We need not have to check and start looking for account from the top to the bottom every time we need to post. Hence, we will not make the mistake of creating multiple T accounts for a single account title just because we missed it the first time we're searching for it. The ratio should be 1 T account per 1 account title. Okay, say this side is for asset T account and the next side for liability T account and so on. Now, according to our first journal entry, cash is debited for 8,000. So in the asset side, create a T account for cash, and then post or put the 8,000 in the debit side of the T account. You may omit the dates, but it's preferable to include it in the T account. Don't forget to leave a mark on the journal to remind us that this is already posted. Easy! Mas mahirap pa magtapat kay crush ng feelings mo sa kanya. Next is the credit to Makinis Maputi, capital. In the capital side that you assigned earlier in the paper, create a T account for Makinis Maputi, capital, and then post or put the 8,000 in the credit side of the T account because it says in the journal entry credit. That's it. Perfect. Now let's move to the next journal entry. In the expense side that you assigned earlier in the paper, create a T account for rent expense and then post or put the 15,000 in the debit side of the T account because the entry simply says debit. You just have to follow the placement, then leave a mark on the journal again once posted. Perfect. Next, go back to cash T account and post in the credit side 15,000 because the entry simply says credit, a decrease in cash. Leave a mark on the journal again once posted. Yes, that's it. Wonderful. We're making progress one step at a time. Now it's time for you to finish the rest of the entries, then go back here to check your postings. After posting, by the way, get the total of both the debit and the credit sides of the T account and the net or the final balance. Actually, that's the point of the T account, to get the balance of its account at the end of the accounting period to be summarized in the unadjusted trial balance in preparation for adjustments and the formal financial statements. The complete T accounts after posting everything in the journal are as follows. Yes, please observe. Check your T accounts. Doing well so far? Very good. Now, it's time for us to gather all the balances from our T accounts and list them in the trial balance in the following order from the top: asset, liability,